Imagine a country where asking about someone's bank account is a crime, not rude, not inappropriate, an actual crime punishable by up to 6 months in prison. For 89 years, Switzerland had this law. It was called banking secrecy, and it made Switzerland the richest country in the world per capita. If you were a dictator who stole billions from your people, you put it in a Swiss bank. If you were a businessman evading taxes, Swiss bank. If you were a drug cartel laundering money, Swiss bank. No questions asked, no information shared. Complete secrecy guaranteed by law. At its peak, Swiss banks managed over $2 trillion in offshore wealth. That's trillion with a T. About 1/3 of all the world's private offshore wealth was sitting in Switzerland. The country got rich, very rich. Banking generated 25% of Swiss GDP. Zurich and Geneva became global financial capitals. Switzerland had the highest median wealth per adult in the world, and then it all came crashing down. In 2008, the United States declared war on Swiss banking secrecy. In 2018, Switzerland officially ended banking secrecy after 89 years. In 2023, Credit Suisse, one of the most prestigious banks in the world, collapsed spectacularly. Today, Switzerland is actively trying to stop being a tax haven. The country that built its wealth on secrecy is now embracing transparency. The nation that attracted billionaires by hiding their money now automatically shares financial data with 90 countries. Why would Switzerland kill its golden goose? Because the cost of being a tax haven became higher than the profit. Because the reputation damage was destroying other industries. Because Switzerland realized it had become economically dependent on helping rich people break laws in their home countries. This is the story of how the world's most secretive financial system collapsed, how American pressure forced Switzerland to choose between banking secrecy and access to global markets, and how Switzerland is now trying to rebuild its economy without the dirty money that made it rich. Buckle up. We're about to see how a nation built on secrets had to learn to live in the light. 1. How Switzerland became the world safe. Let's start with how Switzerland became synonymous with secret banking. Switzerland has been neutral since 1815. After the Napoleonic Wars, Switzerland declared permanent neutrality. It wouldn't take sides in conflicts. It wouldn't join military alliances. This neutrality made Switzerland attractive. When Europe went to war, Switzerland stayed peaceful. When other countries had revolutions, Switzerland stayed stable. When governments seized assets, Swiss banks protected them. Swiss banking secrecy formally began in 1934. The Swiss parliament passed the Banking Law of 1934, making it a criminal offense for bank employees to reveal client information. Why 1934? The Nazis had just come to power in Germany. German Jews were trying to move money out of Germany before the Nazis could seize it. France was cracking down on tax evasion and pressuring Swiss banks to reveal French account holders. Switzerland responded by making banking secrecy a crime to violate. If a Swiss banker revealed client information, even to foreign governments, they could go to prison for up to 6 months and pay a fine of up to 50,000 Swiss francs. This wasn't about protecting privacy. This was about attracting capital, and it worked brilliantly. During World War II, Swiss banks held money for both the Allies and the Axis powers. They held Nazi gold stolen from occupied countries. They held Jewish wealth hidden from the Nazis. They held assets from every side of the conflict. Switzerland stayed neutral. Swiss banks stayed secret. After the war, Swiss banking secrecy became even more valuable. The Cold War divided the world. Communist countries seized private property. Developing countries had unstable governments. Rich people everywhere wanted somewhere safe to hide money. Switzerland offered that safety. By the 1980s, Swiss banks managed an estimated $1 trillion in offshore assets. Zurich and Geneva competed with London and New York as global financial centers. Banking employed over 100,000 people directly and supported hundreds of thousands more. Switzerland built an entire economy on helping rich people hide money from their governments. 2. How the system actually worked. Let's talk about how Swiss banking secrecy actually operated, because it wasn't just about privacy. It was a sophisticated system designed to hide wealth. First, Swiss banks offered numbered accounts. You didn't need to use your real name. The account had a number. Only a few senior bank officers knew the real identity of the account holder. Even most bank employees couldn't see who owned the account. This made tracking money almost impossible. If investigators asked who owns account 76321, the bank would say, "We cannot reveal that information. Swiss law forbids it." Second, Swiss banks had strict policies about not cooperating with foreign authorities. If the IRS in America or tax authorities in France or investigators in Italy asked for information, Swiss banks refused. Their legal justification was Swiss banking secrecy law. Revealing client information was a crime in Switzerland. So even if a foreign government had a legal order, Swiss banks would say, sorry, Swiss law prevents us from complying. Third, Switzerland distinguished between tax evasion and tax fraud. This is crucial. Tax evasion meant not reporting income or hiding assets to avoid paying taxes. In Switzerland, this was considered a minor civil offense, like a parking ticket. Tax fraud meant actively creating false documents, fake companies, or fraudulent schemes. This was a crime. Foreign governments wanted Swiss banks to report tax evasion. Switzerland said, no, that's not a crime here, so we won't help you. This created a massive loophole. Rich people could hide billions in Switzerland, evade taxes in their home countries, and Switzerland would protect them as long as they didn't commit outright fraud. Fourth, Swiss banks charged premium fees for secrecy. Managing offshore wealth was extremely profitable. Banks charged 1 to 2% annually just for holding assets. For a billionaire with $500 million, that was $5 to $10 million per year in fees, just for keeping money secret. The result was a perfect system for hiding wealth. If you were rich and wanted to avoid taxes, launder money, or hide assets from your government, Switzerland was the place. By the 2000s, Swiss banks held an estimated $2.2 trillion in offshore wealth. That was roughly 35% of all private offshore wealth globally. Switzerland had 8 million people but managed wealth for probably 50 million rich foreigners. It was the greatest financial secrecy operation in human history. 3. Why America declared war. The system worked perfectly until America decided it was done with Swiss banking secrecy. In 2008, the United States launched a systematic attack on Swiss banks. Why? First, tax revenue. The U.S. government estimated it was losing $100 billion per year to offshore tax evasion. A huge portion of that money was hidden in Swiss banks. During the 2008 financial crisis, the U.S. government needed revenue desperately. Letting rich Americans hide billions in Switzerland while ordinary Americans paid taxes became politically untenable. Second, terrorism financing concerns. After 9/11, the U.S. became obsessed with tracking money flows. If terrorists could hide money in Swiss banks, that was a national security threat. Third, political momentum. UBS, Switzerland's largest bank, got caught actively helping Americans evade taxes. This gave the U.S. government a legal opening. In 2008, a UBS banker named Bradley Birkenfeld turned whistleblower. He revealed that UBS had sent bankers to America specifically to recruit tax evaders. They attended golf tournaments, art shows, and society events looking for rich Americans who wanted to hide money. UBS bankers helped Americans create fake foundations, shell companies, and secret accounts. They smuggled diamonds in toothpaste tubes to help clients move assets without detection. They coached clients on how to lie to the IRS. Birkenfeld estimated UBS alone helped 20,000 Americans hide $20 billion. The U.S. Department of Justice went after UBS criminally. This was unprecedented. No one prosecuted Swiss banks. Swiss banks were untouchable, but America had leverage. UBS did massive business in America. If UBS lost its U.S. banking license, the bank would collapse. In 2009, UBS settled. The bank paid $780 million in fines. More importantly, UBS agreed to reveal the names of 4,700 American account holders. This shattered Swiss banking secrecy. For the first time ever, a Swiss bank gave client names to a foreign government. The precedent was set. If UBS could be forced to break banking secrecy, so could every other Swiss bank. Switzerland realized the game had changed. 4. FATCA and the end of secrecy. In 2010, America passed FATCA, the Foreign Account Tax Compliance Act. FATCA was a nuclear bomb dropped on offshore banking. It worked like this. Every foreign bank anywhere in the world had to report accounts held by U.S. taxpayers to the IRS. If a foreign bank refused, the U.S. would withhold 30% of any payments going to that bank from America. Think about what this meant. If a Swiss bank refused to comply, every transaction involving America would have 30% confiscated. The bank couldn't receive payments from American clients, couldn't do business with American companies, couldn't access U.S. markets. For Swiss banks, this was an impossible choice. Comply and break Swiss banking secrecy law, or refuse and lose access to the largest economy in the world. Switzerland fought back initially. Politicians called FATCA an attack on Swiss sovereignty. Bankers said it would destroy the financial sector. The Swiss government tried to negotiate exceptions. America didn't budge. FATCA was non-negotiable: comply or lose access to U.S. markets. Switzerland chose survival over secrecy. In 2013, Switzerland agreed to implement FATCA. Swiss banks would report American account holders to the IRS, but it went further. Switzerland realized if they had to give information to America, every other country would demand the same thing. In 2014, Switzerland signed the Common Reporting Standard, an automatic exchange of information agreement with 90 countries. Every year, Swiss banks would automatically send account information to tax authorities in 90 countries. In 2018, Switzerland officially ended banking secrecy. The law that made revealing client information a crime was effectively dead. Banks now had a legal obligation to share information with foreign governments. The 89-year run of Swiss banking secrecy was over. 5. The Credit Suisse disaster. The death of banking secrecy damaged Swiss banks badly, but Credit Suisse showed just how fragile the system had become. Credit Suisse was founded in 1856. For over 150 years, it was one of the most prestigious banks in the world. It managed over $1 trillion in assets. It employed over 50,000 people. And in March 2023, it collapsed in 72 hours. What happened? Credit Suisse had been struggling for years. Bad investments, management scandals, billions in losses. The bank had problems, but the immediate trigger was a loss of confidence. In March 2023, depositors started withdrawing money. Within 3 days, over $120 billion fled the bank. This was a classic bank run. Once people think a bank might fail, everyone rushes to pull their money. The bank runs out of cash. The bank fails. The prophecy fulfills itself. Why did confidence collapse so fast? Because Swiss banking secrecy was gone. Before, rich clients kept money in Swiss banks because of secrecy. Even if the bank had problems, the secrecy was valuable enough to stay. But without secrecy, Credit Suisse was just another troubled bank. Why keep money there? Better to move it somewhere safer. The Swiss government orchestrated an emergency rescue. UBS, Switzerland's largest bank, bought Credit Suisse for 3 billion Swiss francs. The Swiss government guaranteed up to 100 billion francs in potential losses. Credit Suisse shareholders got almost nothing. Bondholders lost 17 billion francs completely. Thousands of employees lost their jobs. A 167-year-old institution was gone in 3 days. The collapse sent shockwaves through Switzerland. Credit Suisse wasn't just a bank. It was a symbol of Swiss financial power. If Credit Suisse could collapse, what else was vulnerable? 6. The real cost of being a tax haven. Switzerland is now grappling with an uncomfortable question. Was being a tax haven worth it? For decades, the answers seemed obvious. Banking generated 25% of GDP. Zurich and Geneva were global financial capitals. Switzerland became the richest country per capita in the world. But the costs were adding up. First, reputation damage. Switzerland became synonymous with tax evasion, money laundering, and hiding dictator wealth. Every financial scandal involved Swiss banks. Every investigation into corruption found Swiss accounts. This damaged Switzerland's reputation beyond banking. Swiss companies trying to do business globally faced questions. Are you another secretive Swiss operation? Can we trust you? Swiss pharmaceutical companies, Swiss manufacturers, Swiss tech companies all suffered from association with banking secrecy. Second, economic dependence. By making banking so profitable, Switzerland became dependent on it. Other industries struggled to compete for talent and resources. Why become an engineer when banking paid 3 times as much? This created a monoculture economy, too much concentrated in one sector. When banking faced trouble, the entire country shook. Third, legal liability. Swiss banks paid over $20 billion in fines to the United States alone between 2008 and 2020. Every major Swiss bank faced criminal investigations. Executives went to prison. The legal costs were staggering. Fourth, political pressure. By 2015, Switzerland was cooperating with 90 countries on tax information. Swiss banks were spending billions on compliance, reporting, and legal systems to track and share information. The secrecy infrastructure Switzerland built over decades was being dismantled. The banks were still managing money, but without the premium fees that secrecy commanded. Fifth, moral questions. Switzerland helped dictators hide stolen wealth, helped oligarchs evade sanctions, helped billionaires avoid paying taxes while their countries cut social services. This created a moral stain. Switzerland was rich because it helped bad people do bad things. Eventually, that becomes politically and socially untenable. 7. Why Switzerland chose transparency. Here's the remarkable part. Switzerland chose to end banking secrecy. Yes, American pressure was enormous. Yes, FATCA forced compliance. But Switzerland could have fought harder, could have resisted longer, could have tried to preserve some version of secrecy. Instead, Switzerland embraced transparency. Why? First, market access was more valuable than secrecy. Swiss banks needed access to global markets. If being a tax haven meant losing that access, secrecy wasn't worth it. Switzerland did the math. Banking fees from secret accounts generated maybe $15 to $20 billion annually, but Swiss companies did $200 billion in exports annually. Losing market access would devastate the entire economy. The choice was clear: sacrifice banking secrecy to protect everything else. Second, other industries were suffering. Swiss pharmaceutical companies like Roche and Novartis generated more revenue than all Swiss banks combined. But banking got all the attention and talent. By moving away from banking secrecy, Switzerland could focus on industries with better long-term prospects: pharma, biotech, precision manufacturing, technology. Third, demographic pressure. Switzerland has 9 million people. It cannot sustain a massive banking sector forever. Banking relies on attracting foreign capital. But as secrecy ended, that capital had less reason to come to Switzerland. Better to transition now to a more sustainable economy than wait for inevitable decline. Fourth, geopolitical calculation. Being a tax haven made Switzerland a target. America, the EU, developing countries all saw Switzerland as enabling tax evasion and corruption. By becoming transparent, Switzerland removed that target. Now Switzerland could position itself as a responsible financial center that follows rules and cooperates internationally. Fifth, younger generations didn't want to be the world's money launderer. Swiss people under 40 increasingly viewed banking secrecy as embarrassing. They wanted Switzerland to be known for innovation, quality, and responsibility, not for hiding dictator money. Political pressure built internally to end the system. Even Swiss bankers admitted the old model wasn't sustainable. 8. The difficult transition. Transitioning from tax haven to transparent financial center is proving difficult. Swiss banks lost an estimated $300 billion in offshore assets between 2008 and 2020. That's a 14% decline in assets under management. Without secrecy, there was less reason to bank in Switzerland. Clients moved money to Singapore, Hong Kong, Dubai, and other jurisdictions that still offered some privacy. Banking employment in Switzerland declined. Over 15,000 banking jobs were cut between 2008 and 2020. More jobs disappeared when Credit Suisse collapsed. Cities like Geneva and Zurich, which built economies around banking, faced painful adjustments. Commercial real estate struggled. Luxury goods sales declined. High-end restaurants closed. The Swiss government had to find new economic engines. The strategy focused on several areas. 1. Reposition as a quality financial center without secrecy. Swiss banks now emphasize expertise, stability, and service rather than privacy, managing wealth transparently for clients who don't need to hide. 2. Grow pharmaceutical and biotech sectors. Switzerland is already a global leader. Roche and Novartis are 2 of the 10 largest pharma companies globally. This sector employs over 40,000 people directly. 3. Expand precision manufacturing. Swiss companies dominate high-value manufacturing: watches, medical devices, robotics, industrial machinery. These industries generate high revenue with relatively small workforce. 4. Develop technology sector. Switzerland is investing heavily in AI, fintech, clean tech, and life sciences. Zurich and Lausanne are becoming tech hubs. 5. Leverage research excellence. ETH Zurich and EPFL are world-class technical universities. Switzerland has more Nobel Prizes per capita than any country. Using this research base to create innovative companies, this transition is working slowly. Swiss GDP per capita remains among the highest globally. Unemployment is low, quality of life is excellent, but the adjustment is painful. A country that got rich on secrecy is learning to compete without it. 9. What comes next? So what's the future for Switzerland and global banking secrecy? First, secrecy isn't completely dead. It moved. Singapore, Hong Kong, Dubai, and offshore islands still offer some level of privacy. Switzerland killed its system, but the demand for secrecy remains. Wealthy people will always want to hide assets. The question is where, not if. Second, cryptocurrency offered a brief hope for digital secrecy. Bitcoin and privacy coins promised anonymous wealth storage. But governments are cracking down on crypto tax evasion too. The era of easy financial secrecy is ending globally, not just in Switzerland. Third, Switzerland is betting on legitimacy over secrecy. By embracing transparency, Swiss banks can attract institutional money, pension funds, sovereign wealth funds, corporate treasury. These clients don't need secrecy but want stability and expertise. This is lower margin but more sustainable business. Fourth, wealth management is changing. The next generation of wealthy clients grew up with transparency. They expect banks to follow rules. They want ethical investing, ESG compliance, and responsible banking. Swiss banks are adapting to serve these clients, becoming responsible instead of secretive. Fifth, Switzerland faces competition from an unexpected source, America. Delaware, Nevada, and South Dakota offer corporate secrecy that rivals anything Switzerland once provided. Shell companies, anonymous LLCs, and trust structures that hide beneficial ownership. The irony is America forced Switzerland to become transparent while offering secrecy at home. 10. Final thoughts. Here's what people don't understand about Switzerland ending banking secrecy. It wasn't noble. It was pragmatic. Switzerland didn't wake up one day and decide helping tax evaders was wrong. Switzerland calculated that being a tax haven had become more expensive than profitable. When America threatened market access, Switzerland folded. When the EU demanded cooperation, Switzerland complied. When Credit Suisse collapsed, Switzerland sacrificed the bank to protect the system. This wasn't morality. This was survival. But here's the remarkable thing. Switzerland is surviving. A country that built incredible wealth on secrecy is successfully transitioning to an economy based on transparency, quality, and innovation. GDP remains high. Unemployment remains low. Quality of life remains excellent. Swiss companies remain global leaders in pharma, manufacturing, and precision engineering. Turns out you don't need to hide dictator money to be prosperous. You can actually build wealth through legitimate business, quality products, and excellent services. Switzerland is proving that the post-secrecy economy can work. It requires painful adjustment. It requires finding new competitive advantages. It requires accepting lower profit margins in banking. But it's possible. The lesson isn't that Switzerland was moral or immoral. The lesson is that even economic models that seem permanent can end when costs exceed benefits. For 89 years, banking secrecy made Switzerland rich. Then for 15 years, banking secrecy made Switzerland a target. Now Switzerland is building a future without it. The world's most secretive financial center learned to live in the light and survived. Thanks for watching. If you want to understand how global finance actually works, hit that subscribe button. Next video, how Singapore became the new Switzerland and whether they'll face the same pressure to end secrecy. Drop a comment. Do you think financial secrecy should exist, or should all money be transparent? I read everyone. And if this video changed how you think about Switzerland and banking, smash that like button. Because understanding how secrecy built and destroyed a financial empire is understanding how the modern world actually works. See you in the next one. Stay curious, stay skeptical, and maybe don't assume that secret bank accounts will stay secret forever.